My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Good morning, friends. I'm just trying to make a little money. My job is not just to entertain, but to teach you how it all works. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. We made it. Yep, we got through another stretch without the White House upending the whole market, which therefore led to the second best week of the year, with the Dow finishing up 20 points. But S&P advancing 0.74%, NASDAQ gaining 1.26%. But now we're about to go head first into the phalanx of earnings, the week where years are made. And it may be too much to ask for Washington to give us another quiet week so we can focus on the earnings of the best we have to offer. All right, look, we're not going to have to wait until Monday to find out what's up with the president. He's in Europe for the funeral of Pope Francis tomorrow, but there's no doubt that he's going to probably try to nail down some trade deals this weekend. Maybe with emissaries from Japan and South Korea. Hey, bears beware. If any country is willing to compromise with Trump, the rest of the world might fall in line. And honestly, if we can't win over Japan and South Korea, two countries where we have a ton of military bases, well, we might as well throw in the towel. So many people are worried about a tariff-induced recession. Steel giant Nucor reports on Monday, and they're really at the crossroads of both. This domestic steel company, the best there is in the world, has been hammered by economic weakness, but they also directly benefit from the tariffs, as they should. The world dumps steel in USA. It's been known for years, and if we didn't do anything about it, if we didn't protect our steel companies, we would have no steel. None would be made in this country. So let's hear what they have to say. Tuesday morning, we get results from another company at the epicenter of Trump's tariffs, and that's General Motors. Now, we're truly in crunch time for tariffs. It's not clear how much they'll add to the price of every new vehicle, but we know the stickers could be shocking. CEO Mary Barra always tells the story straight. Next, I think UPS could give us the lay of the land in terms of tariffs pulling demand forward. You keep hearing that term on our show, right? And causing international disruption. Let's hope the news doesn't disrupt that dividend, which currently gives you a 6.7% outsized yield. On the other side of the economic spectrum, we have Coca-Cola. It'll be interesting to see if Coca-Cola can maintain its momentum. It's the only stock in the consumer products group that I follow that's still hanging in there after a brutal week for the cohort. Did you see PepsiCo? Holy cow. If you want to know my favorite trade for the week, it's going to be Spotify. Now, this has this juicy subscription business. People don't focus on this company a lot. Lots of people ignore it, dismissing it as a radio station without commercials. But I think Spotify's all things entertainment, a competitor to Netflix for your time. Tuesday night, okay, I'm betting that Brian Nichol will spell out his strategy for Starbucks, both domestic and international. We've been stalled on this one for the Travel Trust, with the stock first shooting up 30 points on Nichol's appointment, and then giving almost all of it back when the numbers didn't turn around immediately and the market got ugly. I always thought that a quick breakout was a ridiculous assumption, but now the rubber's going to hit the road, and I still don't see a breakout quarter, but we're going to hold it nonetheless. Hey, by the way, also Tuesday night, we have our Mad Money 20th anniversary show. You cannot miss the retrospective of the last 20 years of booyahs and bull markets on this show, and of course, a little smattering of bear markets, but I'm very proud of our team. We get to show the team with all its glory. Wednesday, it kicks off with Caterpillar, which should give us a sense of how much money is being left maybe in Joe Biden's infrastructure package. They technically only spent about 40% of it last fall, but Caterpillar is certainly not trading like a stock that has plenty of federal construction projects ahead of it, does it? Hopefully we'll find out. After the close, all right, here we go. Meta Platforms and Microsoft both report, and the street's really split on these two. So many are worried about Meta's advertising business, but I think Alphabet's incredibly robust ad business should put those fears to rest. Microsoft's disappointed investors 3 straight times, 3 quarters in a row, mostly by issuing soft outlooks after delivering solid results. Now, I think we need to see this Copilot gain some serious traction while data center spending stays strong, but not too strong. We don't want them to spend even more than they thought. And Azure, its cloud business, gets back into an accelerated groove. That might be a tall order, but I think this company knows the penalty will be severe to its price to earnings multiple, the PE multiple, if it misses a year's worth of earnings reports. Now, we got some some issues to talk about on Thursday. That's right. These are anything but calm and steady healthcare companies. We got Eli Lilly, That's riding the wave of GLP-1 success. And then there's CVS, which is under new management, put up some really good numbers from, and it's just, that's in health insurer, but also its core drugstore business, which they've closed all the underperformers. Lilly's last report laid an egg. They did it right on our show, unfortunately. I'm counting on this one being better, which is why we continue to own it for the Travel Trust. As for CVS, the health insurers have taken it on the chin of late. United Health and Centene both missed expectations. I bet Aetna sticks it. Lots of restaurant stocks have fallen on hard times because of their price points. They just charge too darn much. But McDonald's rolled out some very cheap offerings, or I say cheaper offerings. I like them. And I think the customers have gravitated to the golden arches. We're going to find out for sure on Thursday morning. After the close, Apple and Amazon report. See, look at these 2 days. Meta and Microsoft, Apple and Amazon. And no matter what we hear from Apple, I bet you there'll be a wall of critics ready to pronounce that these are Apple's last good results ahead of the tariffs. They might even be right. We own Apple for the trust, and we are not too concerned. Why? Because I believe these guys can work their way out of any abyss that is China. It's just going to take some time and, of course, some money. I'm counting on CEO Tim Cook to spell out a trade strategy that includes the role of India in making phones. The export business has never been trickier, but there aren't many people in this world who can handle it as deftly as Cook. As for Amazon, okay, listen up. We've been buying this one for the Travel Trust. By the way, of course, you can just, if you join the CNBC Investing Club, you'll get my bulletins before we buy anything. I believe the retail world's undergoing this incredible consolidation toward the big three. And the big three are Costco, Walmart, and Amazon. I think all three can deliver on their promises. I'm not so sure about anybody else, frankly. Of course, Amazon's got major tariff problems with China. So we need to see what they have to say about that. But I like what I've been hearing about their business, the retail business ex-China. I hope that's good enough. One thing we know for sure, few places are as strong for advertising as Amazon, because it's right at that point of contact. I'm also very bullish on Amazon's international business. Nobody else is. I think it's finally beginning to generate some really serious numbers. Friday's important, not just because we have Exxon and Chevron. Hey, by the way, the two largest oil companies, and I doubt that they'll really have anything good to say, because look at the price of oil. No, Friday's big, because we have the Labor Department's non-farm payroll report, and so much is riding on it. This week was so good, in part because President Trump stopped hectoring Fed Chief Jay Powell after Monday. Let's hope that's permanent and not merely a temporary stay of execution. We do need to see some weaker employment numbers so Powell can make the case for rate cuts down the line. Remember, it's mighty hard to cut rates when you're raising the price of everything imported by a pretty hefty sum. The Fed needs to walk a tightrope. I don't think they can afford to do anything right now, but they need to be prepared to cut at the next meeting if we see a big spike in unemployment. Here's the bottom line. This is a really consequential week ahead. We're about to get into the weeds with tariffs. We have to sort out what's real and what's just mandated by the president. Most important, we need to see some trade deals, please. With them, the market can absorb some earnings disappointments. But without them, my anniversary show is going to be not as much fun, and things could get really ugly very quickly after the run-up we just had. Let's speak to Corey in Texas. Corey.
Hey, happy Friday, Jim. I'm a huge fan and longtime listener calling from Nacogdoches.
I've been in Nacogdoches. It is dynamite, undervalued and dynamite. I love East Texas. What's going on?
Awesome. Thanks. I appreciate that. Hey, I'm working on an investment portfolio with my sweet daughter, Harper, who's 10, and she wants to invest in what she calls girly companies. Well, we've spoken on a few she knows, Lululemon, Bath & Body Works, Target. But one company in which she's very interested in, a place, quite frankly, where she spends most of her money, is Ulta Beauty, ULTA. We want to know your thoughts on the company, Jim, and what you think.
I've been thinking a lot about it. One of the reasons I've been thinking about it is, that Sephora's in Kohl's, and Kohl's is doing so poorly that I think people are going to gravitate away from Sephora and come back to Ulta. Ulta's got new management. We have to check out the Ulta store that's in Midtown. I love going there. I'm with your daughters. I think they got horse sense. Let's go to Jake in New York, please. Jake.
Happy Friday, Jim.
Oh, Jake, you betcha. Fishing and gardening this weekend. Real America. What's happening?
So, I'm thinking it's been best of breed right now. We got to focus on best of breed, right?
You bet. More than ever.
So I'm looking at Mattel.
Well, okay, you know I like Mattel. I have them on, but I also have Hasbro on. And right now, Hasbro is in the lead. They've got a bunch. They've got this card game that's really good. If you want to know, I'm not kidding. I'm not kidding about what I'm about to say. If you want to compare Hasbro to Mattel, I want you to go to Grok. I'm not kidding. Go to Grok, because before I came out here tonight, I said, all right, why is Hasbro doing so well? I read the research. The best way to find out, you just had to go to Grok. Can you believe it? How good some of these sites are getting? It's amazing. All right, look, if we get some trade deals, the market will be able to absorb any earnings disappointment that may come through. Until then, though, it won't be very smooth sailing, except on later this week when we've got my Mad Money 20th anniversary show, and I want everyone to tune in to 7. Okay, on Mad Money tonight, shares of ResMed popped on its report this week. I got the medical device maker's top brass to learn more. What a hot stock. Meanwhile, IBM fell at earnings, but is this dip a chance to buy into weakness? I'm telling you where I stand. It's a little controversial. And later, speaking of controversial, could Scott's Miracle Grow be a seed of opportunity in this market? Do not miss my check with its CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.